Working harder for a paycheck is often a losing game for your time. The current financial system rewards those who own the machinery, while those who trade their limited hours for cash find that their money loses value almost as fast as they earn it. We are going to look at the specific wealth structures that the top one. You can always earn another dollar, but you cannot buy back an hour of your life. Relying solely on a salary puts a hard ceiling on what you can earn, because your income is locked to the number of hours you can physically stay awake. Wealthy investors break this link by putting capital and software to work. Instead of doing every task themselves, they build systems that run autonomously, allowing their income to grow even when they aren't in the room. This chart compares steady, linear growth against the path of compounding. Most of us expect progress to look like a straight line, but real wealth often feels like nothing is happening for the first 10 years, right before the growth curve takes off around year 15. To see how much time matters, look at the math. Investing $1,000 a month starting at age 25 creates over $2 million by age 65. If you wait just 10 years to start, that final total drops to less than $950,000. That 10-year wait cost you over $1 million because you lost a decade of growth. This is why keeping all your cash in a basic savings account is risky. The slow rise of prices will quietly eat away at what that money can actually buy over the long run. This pie chart shows a typical high-salary paycheck. Over 40% is sliced away by taxes before reaching your account. Investors avoid this using assets. Property write-offs shield their earnings, rerouting that 40% chunk back to make the original pile grow even faster. Most people use debt to buy things that lose value, like cars or vacations. This creates a downward spiral where interest payments actively shrink your net worth every month. The wealthy use debt differently. They borrow against investments at a 5% interest rate to buy a property paying 9%. By profiting from that 4% difference, they use the bank's money to grow their own wealth. Learning how to reduce tax costs and profit from interest rate differences are some of the most valuable things you can do. It moves your finances away from simple addition and into a state of rapid growth. Discipline is a finite resource. If you have to manually decide to save money every month while resisting the urge to spend, you will eventually have a moment of weakness. Successful investors remove the need for willpower. They set up systems where their money is automatically split up on payday, flowing into investments and tax savings before they see their spending balance. This automation is a necessary defense. Modern advertising is designed to trigger emotional impulses, trying to get you to spend your capital on things you don't need before you can put that money to work. Before you spend over $1,000 on something fun, try this. Calculate the future value of that money. A $10,000 luxury purchase today actually costs you about $46,000 in lost growth over the next 20 years. By taking the emotion and the decision-making out of the process, you make building wealth the default setting for your life, rather than a difficult daily choice. Trying to save your way to wealth has a limit. You can only ever cut your spending down to zero. However, your ability to earn more is theoretically limitless if you focus on building skills that the market values. Hard work is just the price of entry. To move faster, you need access to private networks. The best opportunities aren't found on job boards. They are found by offering your specific expertise to people who are already operating at a high level. This chart shows the type of opportunities you should look for. The red zone at the bottom represents your risk, which is capped at a low amount, but the green zone shows the potential reward, which can grow infinitely large. Things like creating software, building a media platform, or owning a piece of a growing company all fit this model. The cost to start is often just your time, but the potential payout can be massive. You don't have to be right every time. By consistently taking these types of calculated chances, you only need one big win to change your financial future for good. Earning a high income without a plan for your assets is dangerous. It is like driving a fast car toward a cliff. Many high earners eventually find themselves with nothing because they focused on their lifestyle instead of their balance sheet. Every day that your money sits idle or you ignore ways to lower your costs, you are paying an invisible tax. You are essentially working to build someone else's wealth while giving up your own freedom. Take control of where you put your money today. Subscribe to master these blueprints and comment below on which strategy you are starting with first. Is it fixing your tax structure or finding a new way to earn? Let's get to work.